Hello, I'm Tim Beggins, president of Elk Trading Company. In today's article, War Comes for LNG, How Drones Are Rewriting the Rules of Global Gas Trade. In today's article, we've got an image from a Ukrainian stamp showing the Magura sea drone. For decades, the LNG industry operated on a simple assumption. The greatest risks were commercial, price volatility, weather disruptions, and infrastructure constraints. Today, a new threat has emerged that is far cheaper, harder to defend against, and capable of disrupting global energy flows overnight. Drones. Recent incidents demonstrate how quickly geopolitical risk is entering the LNG value chain. An Iranian drone attack that damaged infrastructure at the massive Qatari export complex at Ras Laffan Industrial City revealed the vulnerability of even the world's most important LNG hub. Meanwhile, the Arctic LNG tanker, Arctic Metagaz LNG tanker, was severely damaged and ultimately sank near Malta after suspected aerial and naval drone attacks widely attributed to the expanding shadow conflict between Ukraine and Russia. The implications for global LNG markets are significant. Daily charter rates for LNG carriers have surged as ship owners price in war risk. Insurance premiums are rising sharply, particularly for vessels transiting sensitive routes. Cargo delays and diversions are becoming more common as operators reassess security exposure. What makes this disruption unique is the economics. Small drones costing tens of thousands of dollars can threaten vessels worth $250 million, carrying cargo valued in the tens of millions. The risk-reward asymmetry is profound and increasingly attractive to state and non-state actors alike. For LNG traders and importers, several strategic lessons are emerging. First, supply diversification is no longer optional. Buyers cannot rely on a single export region without exposing themselves to geopolitical shock. Second, destination flexibility matters more than ever. The ability to redirect cargo flows allows traders to avoid emerging risk zones and maintain supply continuity. Third, maritime choke points are becoming strategic vulnerabilities. The Strait of Hormuz, the Strait of Malacca, Panama Canal, and Suez Canal represent critical arteries for LNG trade and increasingly potential pressure points. For Asia, the lesson is particularly clear. Supporting additional LNG supply from the United States may be one of the most effective ways to strengthen long-term energy security. U.S. projects benefit from flexible destination clauses and geographical diversification that help stabilize global markets during geopolitical shocks. The LNG market was built around efficiency and globalization. The next phase will require resilience. And resilience increasingly must account for the reality that modern energy infrastructure can be threatened by technologies that fit in the back of a pickup truck. You can learn more on the links we've included in today's article. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.